First, we want to address the difference between an audit and the agreed-upon procedures. An audit is an objective examination of financial statements to provide an opinion on whether these statements are stated in accordance with established accounting standards and whether they are free of material errors or other misrepresentations. An audit would not have answered the key questions and allegations that have landed Mystic Lands in this state of damaging discord. An audit of the POA books could not have included a non-POA bank account, the account at the center of most of the financial allegations. Now, the goal of an agreed-upon procedures engagement is to perform specific procedures designed to address specific issues of concern, using the standards for accounting and review services issued by the AICPA. No opinion is offered by the CPA. Instead, the CPA presents factual findings from which one draws self-evident conclusions. In our case, the audit product is not a greater effort than an AUP. It is an entirely different product. The AUP tested a larger population of transactions than would have been tested in a traditional audit. The multi-year scope of the AUP is a deeper and more exhaustive dive into record keeping than a traditional audit. Under these circumstances, an audit would be a waste of the POA resources. The following exchange, featuring auditor Marvin Beasley and litigant and CPA Bill Hanna, tells us volumes. The hue and cry from the litigants that AUP work done by Ms. Keel Gomes is a lesser process, no more than whitewash managed by AMI, is contradicted by these two Mystic Lands owners who know better than the rest of us, with one of whom is a litigant and hardly a sympathetic party. I've been an auditor for 40 years, and the content and wording of the engagement letter is critically important. I would hate for the POA to spend money on a process that will not result in a resolution to this conflict. Marvin Beasley, a Mystic Forest property owner and unknown to any board member or AMI, is concerned that unless the scope and exact description of the work to be done are correct, money will be spent without the needed results obtained. Subsequent to Bob Wonderly's letter, signed by some 15 fellow owners pleading that no legal action be taken until the result of the audit are known, Marvin Beasley again corrected us. I agree with the contents of the letter, with the exception that the audit will produce any meaningful results. AMI, not yet fully aware of the difference between an audit and AUP, asked for clarification, to which Marvin replied, "The proposal is not for an audit. It should be referred to as an agreed-upon procedures." As we see, following the Wonderly letter, Marvin again stresses that an audit, its technical definition, a financial statement audit, will not do. An audit will not address the allegations made, but an AUP will. Auditor Marvin Beasley, having reviewed the draft AUP letter of engagement, is unambiguous with his judgment. Ross, these procedures are exactly what I was recommending to AMI. A financial statement audit would most likely be a waste of time and money, while these agreed-upon procedures are specific to the issues raised by some property owners. I support the board spending these funds to resolve the issues at hand. Marvin unequivocally affirms to Audit Committee member Ross Minot that a traditional audit would be a waste of time and money. He supports the board proceeding with the procedures included in CPA Elizabeth Keel's engagement letter. Marvin spoke to litigant Bill Hanna, who had agreed to review the draft of the AUP letter of engagement and add procedures if he felt necessary. Marvin Beasley stated, "I talked with Bill on Monday and asked that he review the scope of work proposed by Ms. Keel. He was going to review it and add any additional procedures he felt would be necessary. I also told him my only offer related to this situation was to coordinate with him the procedures to be performed." Litigant and CPA Bill Hanna was asked to contribute to the creation of the AUP scope of work so that the litigant group would be satisfied. Note, it is procedures, AUP, that the two CPAs are discussing, not a financial statement audit. Only 3 days later, Bill Hanna changed his mind, claiming that the board members would not be able to evaluate the procedures, not audit. And beyond that, if AMI does not like the report, he would simply dismiss the members. I am of the opinion that the current members of the board are not going to be able to evaluate the procedures or any potential findings as an independent board should. I am concerned that as long as the declarant is willing to dismiss board members for disagreeing with him, that he will not hesitate to dismiss any board member for accepting any findings from a review of the books and records that may be detrimental to him. Therefore, I cannot in good conscience participate in this process at all. On the hypothetical of what might happen if AMI didn't like the report's findings, Bill Hanna declined to participate in the process that he knew would answer the pending questions and provide a report that would stand regardless of how AMI responded. Note, the reason Hanna declined to participate had nothing to do with the fact that it was an AUP and not an audit. He knew better. The scope of the source data utilized leaves no stone unturned. 2 sets of accounting books, one from the POA and the other from litigant Fred Yates. All of the developers' accounting records requested were provided. Bank statements and checks, invoices, timesheets, county records, tax returns and other state and federal filings, board minutes. With all the documents in hand, these are the steps taken by the CPA to accomplish her task. Review of receipts and disbursements. Test calculations of detailed financial records obtained from source data, bank statements, original vendor invoices, etc. Cross-referencing of original source data, bank statements, canceled checks, vendor invoices, and timesheets with the POA QuickBooks data. Conferences with AMI, the declarant and current POA president. Conference with Greg Deal, the former executive director of the POA. Conference with Barbara Rich, a former POA bookkeeper. After completing her investigation, in an effort of complete transparency, the CPA held an exit conference with the attorney representing the litigants, the attorney representing AMI, the attorney representing the POA, and a representative of the POA board. After presenting her findings, the CPA asked if anyone had any additional information for her to consider before writing her final report. None was offered. We are eager, of course, for you to watch this presentation in its entirety. In summary, the AUP work delivered a management letter. It contained findings of shortcomings in the Mystic Lands POA management of record keeping and the implementation of internal controls. However, it found no financial wrongdoings by AMI or the POA board. AMI did not steal any money. The report tells us of work done and challenges encountered. The AUP report is based on original documents, payroll records, bank statements, checks, and invoices. It is based on tested facts, not mere allegations, suppositions, or theories. The CPA requested the litigants' evidence in support of their allegations. She did receive significant discussion, comments, and opinions, but received little documentation from them in support of their arguments. The CPA asked Greg Deal and the litigants to provide documentation to support the allegations made by the litigants. She also met with Greg in a lengthy private conference. Greg provided extensive details of the allegations. When asked to provide documentation to support his position and the allegations, he stated that his attorney did not permit him to provide documentation at that time, apart from copies of documents that, on review with all financial data, represented only part of the full transaction picture. The following represents the context for our summary presentation today. For greater latitude of expression, the POA board prepared this summary, focusing first on the financial allegations and setting them in a broader context for better understanding. Thus, it provides further affirmation of the report's factual findings. The reason is that the CPA is restricted in her language in an AUP engagement, as her work does not permit the expression of an opinion, only findings of fact. Furthermore, the historical, technical, and detailed nature of the AUP report may present a challenge to an uninformed reader. This summary presentation and the final report will be posted on our POA website. The first allegation relates to the septic system at the Meadow. The allegation reads, Mr. Sinitsky directed the association staff to deposit checks made out to the association for dues and special assessments to another account owned by Mystic Lands River, Inc. Now here are the relevant facts for better understanding of this allegation. Owners at the Meadow section of Mystic River decided to build a joint septic system rather than individual ones and formed the Meadow Partnership. Until formed as a legal entity, the Meadow owners could not open a bank account to deposit their money and fund their project. AMI offered the Meadow owners use of a dormant bank account that had belonged to Mystic River, Inc. to use as the partnership operating account. Mystic River, Inc. was no longer active. It had merged with Mystic Lands, Inc. The bank account, therefore, was no longer being used. This bank account was neither a POA nor a developer account. The account was managed solely by the POA office, Greg and his significant other, Michelle. Account records were kept at the POA office, not with AMI. The POA office handled the check deposits, bill payments, and bank reconciliations. This non-POA bank account, managed independently and conveniently at the POA office, was also used for for the water system project. The water system project, separate from the septic system, consisted of Ridge and Forest community wells. The project was managed by Greg under separate contract with the developer. Here is a demonstration of how inadvertent instructions led to the misplaced allegation against Tommy. Take a moment to review this email. In this email, there is an incorrect instruction to the partners to make their checks payable to the POA. Clearly, these funds were intended for the partnership, not the POA. Despite the incorrect instructions, checks were deposited in the Meadow Partnership's operating account, where they were intended. Related to the Meadow septic allegations is the Ridge and Forest water system allegation. The allegation reads, Mr. Sinitsky directed the POA Association office staff to deposit all checks received from lot owners for an assessment for a community water system into a bank account owned by Mystic Lands, Inc., and used approximately $60,000 of the funds to improve lots owned by him or one of his companies. Breaking down the allegation, here is the gist of the allegation. The community water system was a POA project. The water system was funded by POA assessments. POA funds were deposited in a developer account. $60,000 of the water system POA funds were stolen by the developer. These are the allegations. Here is a copy of an email from Greg Deal, clearly telling owners that the water project is not a POA project, but one initiated by the developer. Please take a moment to review this email. Contrary to the allegation, the water system was not a POA project or initiative. The project was clearly initiated by the developer, Mystic Lands, Inc. In his next email, Greg not only acknowledges that this is a Mystic Lands developer project, but instructs owners to make their checks payable to Mystic Lands. Please review this slide. In this email, explicit instructions are provided by Greg Deal that checks are to be made out to Mystic Lands, Inc. and not to the POA. Therefore, this was not a POA assessment. In this final document, you can see the terms of the conveyance of the water system from the developer to the POA. It says it all. In particular, the paragraph which reads, "The water systems at completion include electric service, wells, pumps, pipes, taps, and miscellaneous plumbing. All remaining costs to render the systems operational shall be Mystic Lands, Inc.'s responsibility." Also note that as of the total number of potential participants, only 11 owners had not subscribed as of this date. Prior to November 1st, 2012, the POA did not own the water system and would have no reason or legal right to levy an assessment. As of this date, only 11 lots were still eligible for the $5,000 buy-in rate. This totals $55,000, of which only $50,000 was collected. Since Mystic Lands Inc., the developer, assumed full responsibility for the total system cost, these fees were contractually due Mystic Lands Inc. The following observations are inescapable. Since the bank account at issue is not a POA account, the POA has no legal standing with respect to this account. How then the allegations? AMI could not steal money from his own account. Hypothetically, even if the funds were raised through assessments and not contractually due to the developer, then stolen from the POA, it would not be possible to steal $60,000 when only $50,000 was collected. Hypothetically, even if any funds were improperly removed by the developer, it would make no difference, since Mystic Lands Inc., the developer, is contractually bound to fully complete the water system, regardless of the cost. The cost of this project has already exceeded the budget. Now, again from the AUP report, about the water and septic systems bank account. All transactions are recorded and reconciled directly from actual bank statements, not copies, into a record-keeping package of receipts and disbursements. The amounts contributed to the account by the declarant and the amounts withdrawn from the same account by the declarant are essentially the same. No money was taken from either project by AMI. All deposits made by the partners to the two systems were used for partnership purposes. No funds were misappropriated. No funds deposited into the account were POA funds. The next allegation is the developer stole $35,852 from the POA. The allegation reads thus. Mr. Shinitsky instructed the association staff to sign over to Mystic Lands Inc. a check in the amount of $35,852.71 payable to the association for dues, tap fees, and assessments on a lot that had been foreclosed on by Fifth Third Bank. And here is the background factual information. As the December 31st, 2013 email shows, Greg Deal hoped to purchase this lot and resell it for a quick profit. In his position as executive director, Greg was in the unique position to know of lots in distress, and he used this insider information on several occasions to his benefit. In the hope that Fifth Third Bank would absorb various POA charges, Greg issued an invoice in the total amount of $35,852.71, which included a fraudulent charge of $32,000 for a septic hookup. The bank rejected the invoice, demanding that the buyer pay these charges. When AMI entered as a prospective buyer, the fraudulent POA invoice could not be retracted without putting the POA in a bad light. In fact, the POA invoice included in the closing statement is for a different amount than is stated in the allegation. It was changed to $33,923.05 after Greg realized that he could not charge for unpaid dues. This entire amount was added to the purchase price of the lot and paid by AMI. Of this sum, only $1,423.05 was due to POA. AMI repaid himself only the amount he paid the bank in excess of the sum rightfully due to POA. Now here are a couple of documents that shed light on Greg's mindset and actions. Take a moment to read each of them, and we will examine them more closely. Stance of responsibility. What Greg really means is, will the bank accept this claim of assessment as part of the purchase price? Every unethical tactic seems to be permissible to Greg. The $32,000 figure given to the bank was untrue and unauthorized as an assessment by the POA board. It had nothing to do with the facts. As this email shows, there are advantages to having insider information. The next document speaks for itself. It is the invoice that Greg created for Fifth Third Bank, in which he included the unauthorized charge for septic hookup. That was in fact a Meadowship partnership project. Stating special assessment pursuant to paragraph 405 in Mystic Forest Declaration of Covenants Construction of Community Sewer Plant. But in fact, the sewage plant is owned by the Meadow Partnership, not the POA. The POA, therefore, has no legal standing to levy an assessment. Only the POA board can levy an assessment, and it never did. Even if an assessment were possible, it would be a specific, not a special assessment. It could not be in the river if pursuant to Mystic Forest covenants. Now, again, from the AUP report. The declarant provided documentation that he paid the fees on closing to the bank from personal funds to protect the integrity of the POA. On closing the property, the bank remitted the charges to the POA. The declarant was entitled to reimburse himself $32,000 and the $500 water fee due to him of the $33,943.05 he had paid on closing. The CPA asked Greg Deal specifically about the nature of these fees. Greg explained that the invoice reflected normal fees, including fees for water and sewer that were normally charged by the POA and, therefore, due from the declarant when he purchased the property. No other homeowner fee of this size collected by any of the POAs was observed. This type of fee could not be located in record keeping as a normal charge. The next allegation addresses the payment for former property manager Robert Cooperrider. The allegation reads, Mr. Shinitsky used association funds to pay Robert Cooperrider for work on behalf of his companies unrelated to the association's management. Cooperrider was the property manager for the 3 POAs from late 2007 to mid-2009. Coop also had responsibilities for the developer, who, contrary to the allegation, did pay 50% of Mr. Cooperrider's salary. Again, from the AUP report, 1/2 of Cooperrider's salary was paid by Mystic Lands, Inc., the developer. In 2007, 2008, and 2009, Robert Cooperrider was paid from POA funds. Invoices were created from the POA to the declarant for 1/2 of Mr. Cooperrider's compensation. The AUP included tests for 2008. The CPA examined declarant charges and POA receipts of 1/2 of Mr. Cooperrider's compensation from the developer and record keeping and the POA operating account. The next allegation is the POA's debt to the declarant, and it reads, Mr. Shinitsky claims that the association incurred indebtedness in the amount of $280,000 to him without knowledge or approval by the board and seeks payment of that amount. A few background facts on the POA's debt to the declarant. The long-term debt shown on the POA balance sheet at the time that this allegation was made is for the amount of $263,273, not $280,000. Why not be accurate? Contrary to the allegation, the board did know and approve, although not by a motion, the declarant's advance funds. This is pursuant to the covenants to make up budgetary shortfalls. Contrary to the allegation, the declarant has not made claim of payment of that amount. Contrary to allegations that the declarant claims the debt, hid the debt, announced it in September 2014, or by Executive Director Greg Deal that I only found out in June, the debt is recorded in the POA books since inception in November 2006. As to transparency, the accounting books have never been kept by the declarant, AMI. They are at the POA office and were under the supervision of Greg Deal, former executive director, and Michelle Hedden, the POA bookkeeper, who is a related party to Mr. Deal, putting the POA in segregation of duties jeopardy as to